David, for those who don't know, why shouldn't insurers cover this kind of black swan event for restaurateurs and other small and medium enterprises?
Well, first of all, I would say that America's insurers stand by our policyholder contracts, and we have always and will continue to pay all valid claims. When we talk about business interruption insurance, we're talking about property insurance policies that cover physical damage from disasters like hurricanes, wildfires, and they generally do not cover viruses, pandemics in the standard insurance policy. The real important words there are it is a property insurance coverage that covers physical damage. The restaurants and other businesses that are shut down, and look, what the small business community is facing is very devastating, but they're not shut down because their businesses have been damaged. They're shut down because of fear of human-to-human transmission of a highly communicable disease. And it's just fundamental that property insurance is not designed to handle that kind of catastrophic event.
Sure, but you could also argue that they are not shut down directly because of that, but they're rather shut down because the states have mandated that they shut down.
Yeah, so what you're referring to is the civil authority provision. But again, that is a very specifically defined legal concept. And a civil authority provision in these property business interruption policies are when governments shut down a business because there is a physical damage that prevents or makes it dangerous to get into properties because of, again, property damage to the underlying business. And as disruptive as this is, it's simply not covered under pandemic or covered under business interruption. As a matter of fact, since the SARS outbreak in 2003, most standard insurance policies sold in America have specific exclusions for virus or pandemics, and that's why the National Association of Insurance Commissioners stated very early on in this crisis that the business interruption policies do not generally cover pandemic events.
Right, so we're talking about contract law here, and obviously the lawyers on both sides are gearing up for a major fight, and there's concern about setting precedent here. But after other occasions, such as 9/11, there were one-off examples made, right? One-off substitutions. Couldn't that again be the case here, given that the restaurant industry argues that they support 15 million jobs, $1 trillion in GDP for the economy? Why not just organise between yourselves to make this a one-off example? And it's not like the insurance industry will be out. You know, the federal government will make the insurance industry whole, presumably.
No, you can't assume that at all. And first of all, I would say that the issue is much broader than just what's happening to America's restaurateurs. We estimate that closure losses for small businesses with 100 or fewer employees in the United States is falling between $255 billion and $431 billion per month. That's why the Paycheck Protection Plan ran out of money in its first 2 weeks after Congress appropriated $350 billion for that. They have subsequently topped that off again with another $250 billion. Then that program is expected to run out within a week to 10 days. The entire surplus for all U.S. home, auto, and business insurers combined to pay for all future losses is roughly only about $800 billion. And so you can see if business continuity losses are running at $431 billion per month. If we were to do what you just suggested, or what some of the plaintiffs' attorneys are suggesting, it would bankrupt the industry within a matter of a couple of months.
David,
it would be a solvency issue for the industry.